When I got into real estate, my focus was more on the who, not the how. Say, hey, who can I find with to work with, hire, partner with, invest with, do a deal with? And that's been a big mindset shift for me as well. And so that's something I would, again, encourage everyone out there listening. And as you reevaluate everything, hey, who are the right who's you need for your situation? Well, Q4 is here. So that means it's time to start planning for 2026. So I like to plan early because when the new year hits, I like to be ready and prepared. And I'm usually a couple of steps ahead of everyone else. So beginning Q4 means I got to make sure I have my plan in place for the next year. So what I always like to do is reflect upon, hey, what's worked well and where are the opportunities at? So that's what we're going to do in today's podcast, is actually just reflect on some of the big market shifts that I've seen personally, and then talk about how I am diversifying my portfolio, not just in real estate, but my global portfolio. And I got a few like big shifts that I am making this year. So my name is Chris Lopez. I'm the host of the Denver Real Estate Investing Podcast, and really excited to start planning for 2026 and eventually hear what other people's plans are as well. So I'm going to talk about this from kind of two aspects, kind of the entrepreneurial journey and also what my investment thesis is. Where am I making money as an entrepreneur? And then how am I investing the money on the investing side? So going back to about 2002 timeframe, that was my entrepreneurial beginning. I was a sophomore at Virginia Tech, got bit by the bug. That led me to some early tech and online marketing businesses. Did really good. I did really well on that. Like, I learned how to run a business. I learned how to like generate revenue, generate profit, and just learned a lot of those core skills on how to make money and how to run a business. But at the same time, I made mistakes as well. I invested too much back in the business, and I wasn't diversifying away into like non-correlated assets. Just taking money off the table and putting it completely somewhere else. Plus, I had some lifestyle inflation, so I spent more than I needed to, but had a fantastic time. And then when it was time to invest, I focused on day trading and foreign currency exchange. I think most people, it just wasn't productive for me. So right around 2008 timeframe, that is when the great financial crisis was happening. And while I was not in real estate then, and my business did not have like any direct major impacts, we still had the general ripple effect through the economy. Plus, then we had some like macro industry headwinds. I had two business partners, and issue emerged with one of them. It's all just led to like, hey, the opportunity had changed, income was starting to drop off, and that was one of my big lessons. Was every business opportunity, every investment opportunity, it has a life cycle, or it has a sweet spot for where you are in the cycle of it. And so I knew, hey, what I worked in the past is not what's going to, get me to where I want to go. So I'd always want to get into real estate because I'd read Rich Dad Poor Dad back at Virginia Tech. And so prices were so low that right at the January 2011, I bought my first house hack. It was half the cost of paying rent. And also I got the property for like a third less than what it was going, or about 33% of what I was going for, 3 years before. And then plus, this is where I made my first just creative deal. I was able to get a private investor who lent 100% of the value and closing cost on a 15-year, 5% fixed note. You see, back then, it's hard to get income. She just wanted income, and she's willing to lend money on real estate, and also had a great relationship with her. So that kind of gave me the belief out there to really go all in on real estate. I was like, wow, I can go out there and be active. I can go out there and do deals. I can't do that in the stock market. So really focus on real estate starting around 2011, 2012 timeframe, to make a new investing thesis on buying rentals, but also what I could do, as an entrepreneur as well. And my investing thesis, I would say, was pretty simple, but also it's what worked back then, right? It was buying rentals, doing some light value add, cash out refis, 1031s, and you could just, grow a great portfolio. So since I was focused on that, I naturally had a lot of other people say, hey, Chris, how can I buy rentals? How I get into here? And I love teaching, I love helping. And plus, I want to correlate my business to, hey, where the investments are on the trend, or where they are in the investment cycle. So that's where Envision Advisors came out of. We helped, hundreds of people buy rentals and house hacks. And so it was just a great synergy of, my investing interest, the market trends, and also being able to build a great business. It was an absolute pleasure helping hundreds of people. And we still do. It's just, there's a lot less rental property deals right now. And that's something I want to talk about here is I'll take a big nugget I learned is you get some like amazing effects by stacking opportunities, stacking what you have on your radar. And by that, I mean, hey, I was focused on investing. Personally, there's an opportunity to go out there in the marketplace and help other investors go out there and do it as well. And also the market just made a lot of sense where, hey, we all had the double-digit rent growth and appreciation for many years, right? It was a lot of great factors in there. So, one of my philosophies is, hey, how can I stack opportunities where you get that 1 + 1 + 1 = 9? So I just mentioned that because I think that's a big principle of me. Want to share it out there and tell the people. I feel like a lot of times I talk to people. There's room to optimize how they can kind of stack, where they're at in life, their skill sets, their capital, their opportunities. So I encourage everyone to go out there and, ask yourself that question as well. Anyway, back to here. Starting around 2020, I ran into, I'll say, kind of like a great problem, right? The next, pain point of evolving as the more successful investor is I was, in the last market cycle, I made money, invested poorly. In this one, I made money, invested wisely. And because I invested wisely, now I had a high concentration in Denver residential rental properties. Plus, my business was associated there as well. So, high concentration. And I wanted to start to get, geographic and asset class diversification as well. Just because, love Colorado, but it's always good to diversify once you get too highly, concentrated. So I started doing some passive investments. Really liked it. Got great returns. I was also getting busier in life. And so, I kind of slowed down buying rentals, started doing some LP investments, and then eventually sold some rentals and just transitioned that active into passive investments. So, I started doing that a number of years ago, and looking back, I'm really happy with that decision so far. Increased cash flow. I've got more bandwidth. My operations have simplified. I closed 3 LLCs and eliminated a bunch of just bookkeeping headaches and services and things like that. So just simplify a lot of things. And most importantly, where we are in the market cycle, like the best deals are in the commercial space, right? And those are a lot easier access through syndications and passive investments because that is where the pain is. And that's also where the opportunity is. So that brings us to like present day. And so I'm kind of sharing my reflections so you kind of know where I'm planning, and hopefully that triggers a few ideas for yourself out there as an investor or entrepreneur. So present day, while I had diversified within real estate, because I moved a lot from active Denver to also including passive nationwide. So I just kind of rebalanced my real estate portion, but now my real estate, investments were 75, 80% of kind of my total, global portfolio. And so now it's like, okay, now I got a lot of concentration in real estate, overall. Time for that just broader diversification. Not that I don't believe in real estate. It's just always good to have, I think, non-correlated investments. And so when I take a step back, the number one thing I always look at when I start writing my theories and how I'm investing is look at the big freaking trends. Just because when I've looked back, hey, I've worked hard, I've made opportunities, but the biggest thing is when I have invested with the trend, like in, hey, Denver rentals, 2011 plus, I've always, the market helps you just tremendously make up for mistakes and also just increase profit. So growth is your friend. So in real estate, I'm actually going to reduce the overall allocation to probably about 55% of my global portfolio, so down from 75, 80 to like 55 or so. And then within there, and I'll talk about where I'm placing that money, but then the rebalance I want to do within my real estate portfolio is really focused on the capital stack angle. And real simply, there's 2 main parts of the capital stack. You got your equity side and your debt side, your senior debt in a first position side. Now there's other things in between, but those are like the 2 major ones. So as a landlord And then a lot of my first passive investments, it was all on the equity side. And then 3 years ago or so, I started investing on the debt side, and I started doing that investing via debt funds. And I really liked it because it was consistent cash flow, reduced risk because your first position senior debt. So a lot less likely to lose capital or get wiped out. And you have diversification. I can invest in, hey, my one investment goes into 50 or 100 or 150 loans out there. So I have good diversification in there. So overall, I've been probably about, right now, I'm probably about 85% equity, 15%, debt funds, so to speak. Over the next few years, I want to shift that to 50-50. So a lot of that will be as I get new money, I'll be investing, majority of that into debt funds. And then, less into equity. And a lot of these equity deals I'm in, they're all positioned well. It's just going to take a couple years to really for that, to cycle through and be able to sell and capture that value. So within there, I want to go from get to 50% equity and 50% debt, and do that via debt funds. So be on the lending side. So that's my big balance, is the capital stack diversification. All right, so where I want to increase the majority of my global portfolio is into public markets. So stocks and bonds, stocks actually. So I'm going to increase that. I'm probably about 15 or 20 now. Increase that all the way up to 35. Again, this will take a while to do. So really shift up to that. And the two biggest reasons is it allows me liquidity. So increases liquidity. And then also there's some big trends in the macro market that I can't go out there and operate. I have insider knowledge into real estate. I don't have that in other markets. So my philosophy is I don't look at private deals just because I am, too ignorant to know to ask the right questions and evaluate it. So my plan is I do that via public markets, right? Because that is, I can, just easier to do, I think, and more, hey, I wanted this trend, I can invest out there. So historically, I've been 85, 90% S&P 500 and about 10% cash. It's kind of like the Warren Buffett method. And most of that cash was actually also just, in play money and opportunistic stocks. But I was very hands off, other than, buy a few stocks here and there and hold for a while. So now within that portfolio, I want to diversify into 55, 60% broad market exposure, the S&P 500 index funds, and about 40% into trend plays. And so, hey, I believe in betting, on the American economy overall, but I want to take some of that money, invest in just the big trends. I'm hey, this stuff is growing. I want some focus and exposure to it. So a lot of things just AI. So, that is going to be growing a lot over the next 5, 10, 15, 20 years. And then really around the infrastructure, right? The energy needs, bought a little nuclear energy ETF as well, because I think that's going to come back. Getting some cryptocurrency. Now I'm just buying ETF positions through Fidelity. That's the majority of the Bitcoin I own, and then some small stuff in Ethereum and Solana. Betting on blockchain, some blockchain ETFs, some data center ETFs, and then doing some heavier tech exposure through the NASDAQ 100, the NASDAQ 200, and just some individual buys as well. And then something I've never done before is actually started buying gold as just a hedge against, inflation. We're on the market cycle. So allocating towards that from, the global standpoint, and then with it, rebalancing within my stock portfolio from, a lot less S&P to and really increasing just those big trend plays. Again, that's the big trends I see out there. Okay, I want exposure on that. Next part of my overall, portfolio, my investment portfolio is probably about 10% cash. So this is, reserves for properties, operating expenses, some opportunistic capital go out there and invest in. And then probably about 5% overall is just opportunistic investments. These will be the private deals on, and within niche parts of real estate, or just, through the network, I see, hey, that looks like an amazing deal. So, some of the exploratory, the fun money, and hey, if this pays off, it could be, a 20, 30, 40X type thing. But I keep that to about 5%. So shifting a lot of my global portfolio that way, again, that will probably take, 2 to 3 years to do, depending on when a lot of these equity deals start, liquidating. And then the next big thing I'm focused on is, since I'm buying less rentals and doing a lot more passively, I have focused a lot into contributing and rolling over IRAs into a self-directed 401k. I'm a big fan of using self-directed investment accounts, really to invest in two things. I opened one 2021 when I started buying a lot more passive deals, because when I looked at the numbers as a rental property owner and a broker, it just never, the numbers weren't great, and there's a lot of just stipulations around investing in rental properties through self-directed. So the two areas that I've seen people do successfully with 401ks, and that's why I'm moving more of my money into investing through 401ks, is first, it's easier to invest in real estate private partnerships and syndications. So, the various funds, all that, you don't have to go through and get like non-recourse debt and have, just deal with those hassles. So I like that play a lot. The second, and this is the opportunity that I did not realize in the previous market cycle, was I always looked at buying properties on the equity side. Where I have seen a lot of successful investors do it is they have lent through their 401ks on the debt side, right? Hey, they'll lend $100,000, $200,000 or more, to a fix and flipper or a debt fund out there. A lot of times they're doing, private lending as well. So I'm investing a lot through that. So through syndications, both equity, and then I like the private lending. I just don't want to do it direct. So I'm investing through debt funds on there. So one other thing on my radar for like overall, real estate stuff, and then, kind of partly in buying real estate and doing 401k, is a contrarian point of view in Denver right now. And, overall like Colorado for the most part, but really Denver, that's the market I know the best. Because two things on the lending side, the capital stack side, and we've had a investment partnership with Diamond Capital. We've helped them open up here in the Denver market, and I helped them underwrite a lot of, a handful of the first loans out here, and really kind of learn how those deals are structured. And there are just some great deals, lending, right? It's good for the investor, but also us as a lender, like it's very lucrative. So like I've enjoyed that. So I've started, exposing more to Denver through like Denver hard money lending. And then I've talked to a friend, and seeing properties, multifamily units for less than $100,000 per door. Like he was telling me he just got a 10 unit under contract that was around, I think, $95,000 or $98,000 a door in Congress Park. So a lot of these prices are they're getting to 2018 prices, right? And then me, like a lot of people, there's just negative sentiment, right? Hey, the market's tough, the cash flow's tough, the rents are tough, the legislation is tough. And so good time to revisit Warren Buffett's quote. Be fearful when others are greedy, and greedy when others are fearful. So I really got actually Denver back on my radar for, again, investing on the lending side, and doing some equity investing for some of these. I think going to be some just really low basis deals you can buy on multifamily. So that's kind of where I'm looking at for my overall portfolio, and then some of the context to help you share some of the lessons that I've gone through and how I'm applying. But the last thing I'll focus on, and this has been a big mindset shift for me since starting, really getting active in real estate, is in that first phase of my business is all about I did everything, or me and a partner, a very small team, is all about how. When I got into real estate, my focus was more on the who, not the how. Say, hey, who can I find to work with, hire, partner with, invest with, do a deal with? And that's been a big mindset shift for me as well. And so that's something I would, again, encourage everyone out there listening. And as you reevaluate everything, hey, who are the right who's you need for your situation? Now, if you're an active landlord, that might be, hey, you go from self-managing to property manager, or you hire an asset manager, or you go out there and find, operators to go invest in or do a deal with. So I'll leave on that, because I think that's a great way to go out there and scale. And in this current market and the next, 5-10 years, there's a lot more partnerships, right? That's going to happen in real estate, and a lot less solo investing. So I would put that on your radar. Now, with that said, if you got any ideas or deals, you see opportunities to work with me or Property Llama or Envision Advisors, reach out. Again, I'm always looking for the right who, and as well. So love to connect at some point, and I'll end on this. Every year we do a portfolio analysis mastermind. We're doing one here probably kind of mid or late January. Details TBD, but I wanted to get my own act my own, butt planning for 2026 as an investor and as an entrepreneur. And we're going to put that on your radar as well. So be on the lookout for what we're going to be doing with the Portfolio Analysis Mastermind in early Q1.